If you feel you're paying too much in taxes, you probably are. My name is Michael B. Hansen. I'm a certified financial planner and one of the principals at Frontier Wealth Strategies, an independent and fiduciary RIA firm. I encourage you to watch this video to learn about a tax mitigation strategy available to individuals with a net income over $400,000. At Frontier Wealth Strategies, we do three things for our clients and we do them well. Number one, learn about our clients' values and goals through financial planning, thus allowing us to make sound recommendations. Two, we utilize sophisticated tax mitigation strategies to help our clients retain more of their wealth and implement recommendations for continued growth. Three, we complete a thorough and due diligence on all of the products we recommend to our clients, thus having more sustainable and positive outcomes. By doing all this, our clients trust us and know we are focused on protecting and growing their overall net worth. Today I want to talk to you about a tax strategy involving real estate called fee simple donations. You may or may not have heard about these programs, so I'd like to give a brief explanation of how the programs work, the pros and cons, and allow you to decide if you like to learn more about the current programs through our firm. As with all tax mitigation strategies, it is strongly recommended you consult with an experienced and knowledgeable CPA or tax attorney to see if this strategy is right for you. This video is not meant to fully educate you about fee simple donations as related to the IRS Code 170A, but only meant as a brief overview of how a strategy like this could possibly benefit you. Finally, I believe that this information to be correct as of the date of release. Conservation easement donations were first brought into existence by President Roosevelt because he wanted to conserve some of our country's greatest landscapes for others to see and experience. President Reagan furthered this effort on December 17, 1980, when he officially established into our legislature rules a tax incentive to encourage private investors to insist in preserving land for agricultural needs, wildlife habitat, and environmental stewardship. This incentive was IRS Code 170H, which gave individuals with incomes near or at the highest income tax brackets a legal way to lower their tax liabilities by helping to conserve land. Up until that point in time, most people purchased land for two reasons. One, buy and hold for legacy purposes. Two, develop into a business or something else, then sell. A conservation easement landowner retains ownership of the land but can establish an easement on any portion of their land, which puts on limits what they can do with it. The easement is recorded with the deed and remains with the land even if it's sold or passed down to heirs. For example, a landowner may put an easement on one side of their ranch to make sure no one builds too close to his structures or operations to protect his livestock. A fee simple landowner does not retain ownership of the land like the conservation easement because the land is immediately given over to a land trust who then is mandated to manage and maintain the land for various needs like public roadways, trails, habitat, or environmental stewardship. There are three more differences between the two programs. Property with a conservation easement has a lower fair market value than land with fee simple ownership. Land with a conservation easement is valued as the difference between the land's value before and after the easement, where land with the fee simple ownership is valued using a typical appraisal. Conservation easements rarely grant public access to the land, while fee simple ownership is often used for public access needs. Conservation easements and fee simple donations are similar if they both are conserving real estate for another purpose. So why invest in a donation program? You protect land used for agricultural purposes like grazing for animals, and livestock provide protection to endangered species, provide natural habitat for fish, wildlife, and plants. slow down deforestation, and provide scenic enjoyment for the general public. What is the financial obligation and benefit to you? Minimum investment is approximately $25,000. You can deduct up to 30% of your adjusted gross income, or AGI. For every dollar you invest, there is a potential deduction in tax liability of 3x to 5x of the amount invested, depending on the valuation of the program. The deduction is not subject to AMT, alternative minimum tax. Any deduction not used can be carried forward up to 5 years. We like to work with real numbers, so we always insist on consulting with the CPAs of our clients or their tax attorneys to have your other professionals confirm if this program is right for you. To get more specific details, please call us at 925-255-0004 or visit our website www.frontierwealthstrategy.com, where you will get more information about how we work with our clients. As an independent RA firm, we are not beholden to any institutions in the products or services we provide. We work in a fiduciary capacity with recommendations which serves our clients' best interests. You deserve the best, and we look forward to hearing from you.